Hey everybody, Boris, this is BK Force. Welcome to Weekly Technicals for Aussie dollar, dollar CAD, Kiwi dollar for Jan 22nd to Jan 26, 2018. And as always, the story in the COM dollars is that they are sort of a muted, low volatility expression of what else is happening in the marketplace. I think everybody's been caught by surprise at the strength of the anti-dollar rally in the COM dollar land. The fact that Aussie took out the 80s, the fact that Kiwi took out the 73s has been, I think, a remarkable move to the upside, a surprisingly strong move in this upside in both of those pairs. But here again, we are coming up against some very, very stiff technical resistance. But as usual, the COM dollars, if they're going to correct, are very likely to correct smaller and less steeper than the majors. So there are always opportunities here on both sides of the market to take advantage of them. For now, let's just take a look at the resistance support levels to establish where we stand as we enter the week now. Aussie now comes up, of course, at the 81 as the very, very key triple top resistance level. This is, I'll show you on the charts, over multiple months and weeks that we have this resistance level. So I think that's going to be much harder to overcome than anything else that came prior. CAD is its own story, as always. CAD is really going its own way because of all the idiosyncratic risk that's happening in the Canadian economy. We have strong Canadian economy, hawkish BOC, and the existential threat of NAFTA being repealed. And that is really what's hanging over the head of the loonie at this point. Loonie is a relative weakness trade in the COM dollar land just for this one reason alone, the idiosyncratic risk from NAFTA negotiations. It seems almost beyond belief that U.S. would sabotage the free trade agreement with Canada, but you never know. This is a completely unpredictable administration, and I think that's what the market is really, really concerned about. So despite the fact that we have this monstrously strong growth, very, very decent economic performance, and generally a very hawkish BOC that sees rates essentially 200 basis points above their current level as a neutral level, and yet they are doing nothing and are going to do nothing because of the fear of NAFTA and the pall that that's casting over the whole Canadian industry. So that's a very separate story from the Aussie and Kiwi, and very much worth watching for us for all of the headline risk that entails. And then, of course, on the Kiwi side, it's just sort of a slow variant of what Aussie is doing. They've been mirroring each other quite a lot. 74 is the resist here, support is 72. Very little on the calendar this week. I think the only thing we have in a COM dollar land is the Kiwi CPI data, which we are a little bit bearish here. And Kathy thinks that that's going to be a short to the Kiwi, and that's it. There, on the CAD side, we have the CPI data, and I think we should have, yeah, and we have retail sales as well. So those are going to be interesting input points into the Canadian economy, but how steep and how deep they will affect the Canadian dollar is going to be very dependent, I think, on further negotiations on NAFTA and all of the political risk that entails. We are actually mildly bearish on the Canadian CPI data, no view on the CAD data, because I think we have the wholesale sales coming up before that, and that's going to determine how we're going to be looking at the retail sales in Canada. So those are the news aspects of the COM dollars. Let's take a look at the charts and see what they're showing. Let's start with the Aussie first. So I think it's very, very clear here that 80.81 is a massive overhead here, going all the way back to August of last year. Matter of fact, let's go back on the weekly chart and just see how powerful this is. We have to go back. What year is this? This is 13, right? We have basically 80 has been a cap since 2013. So it's a 5-year cap. I'm talking about 80.81 as a zone. And that's what makes it so very difficult to believe that it's just going to skyrocket past this level. The high probability bet here is if you scale out into this position, and essentially, well, you have to really hold 82 as a stop. But I suppose you could put yourself at an 81.50 as a stop also, because if it gets to 81.50, that's really a significant move for the Aussie against the dollar. But this whole zone here is clearly a high probability short zone because it's a massive resistance over 5 years. And as I said, if we get any kind of positive news out of the U.S. economy or out of the U.S. politics this week, the relief rally is sure to take us back at least to the 79, perhaps even 78.50 level on just simply a correction basis. Kiwi, same kind of a story here, but the levels, of course, are a little different. We have this 73, 50, 74 zone, really all the way up to 75, actually, if you want to look at the Kiwi. But this 73, 74, also very big resist area, although it's a much more shallower, more recent resist shelf than it is in the Aussie. And actually makes me think, and it's not anything that I had on my crosses, but it's just I'm kind of actually curious to take a look at this for a second. And it does make me think that, well, I think they're both at parity here. There is very little, there's very little cross movement here that's worth watching on the Aussie Kiwi. There's no much directional move. It seems to have kind of found support. And I think it's pretty much contained because neither side of the story has much difference as far as Aussie or Kiwi goes forward. Last but not least, let's take a look at CAD. And this is weekly charts. And the weekly chart actually is very bearish Canadian dollar. I like the Canadian dollar least, or dollar CAD the most, as far as the COM dollar trades go, for a whole bunch of reasons. Obviously, the NAFTA threat is the primary reason, but if you look at it technically, there's a really, really good signal here that dollar CAD is a buy, because this is a big reversal of the flow. We found support. It's a big reversal. They bought the bottom, and this type of a candle generally suggests further extension to the upside. Furthermore, if you look at it on a longer term chart, we've made a higher low. So all of this suggests that a move back up towards 26, perhaps even 26.50, not at all unreasonable in dollar CAD, as the threat of NAFTA, the dollar relief rally, all of those things really make dollar CAD the weakest of all the COM dollars as we go into the week. Wish you guys the best luck, the best trading. Boris Schlossberg, over and out.